Afternoon. Are you ready?
Good afternoon. How are you?
How are markets looking, Mir?
I would say a bit tentative. Decent news on the local economy, domestic economy, and some hope also for the second half. But the global headwinds still continue. So I would say it's a mixed bag.
Decide the script of how markets will move from here, let's settle year end. Will it be state elections? Will it be global macros? Will it be earnings?
I think elections will not be that much of an issue. Uh, the global situation and how the domestic demand pans out will be the keys to watch. Domestic demand was looking very good as we began the calendar year 2023, but over the last few weeks, the signals are getting a bit more mixed. So I would say, as far as domestic consumption is concerned, it's a bit of a question mark. Though I'm more optimistic for the second half. But as far as the spending and the infra-linked situation is concerned, manufacturing, I think that is still going very well, especially government spending happening in the railway space, domestic defense manufacturing, and the highway, etc. capex continuing from the government side, and little bit of green shoots, I would say, on the private capex side. So on the investment side, things are looking okay. Consumption is a little bit of a question mark, I would say.
Okay, so that's a fund flow situation. But Mihir, what's your reading of the earnings season so far? Financials was one space which was the consensus buy. Ahead of that, we have seen the numbers come in. What's your take whether financials will continue to lead the growth going forward or not?
Absolutely. So financials is the space where there is maximum visibility, I would say. At least for the next few quarters, we don't see any issues on the asset quality. We don't see issues on the margins front. So the only parameter I would watch is the credit growth and deposit growth, how it reacts with the liquidity situation panning out. But as of now, this looks like one of the most visible growth phases, and valuations are still attractive compared to pre-COVID levels. So financials is especially the banks and NBFCs are spaces that we are definitely positive on. A few months ago, we were more positive on banks because the tightening cycle was still on, but now we are towards the end of the tightening cycle, and now even NBFCs, which underperformed for a while because of the tightening, now even NBFCs are looking attractive. So both on banks and NBFCs, we are constructive.
One set of stocks which is really in focus has been the Adani group of stocks, and we've been mapping the kind of market cap change that they've seen in just the last two trading sessions. Friday midday, when you had that semi-clean chit handed over by the Supreme Court when they did make their observations so far public. So by the way, the Adani Group stocks have changed over 1.1 trillion rupees in just the last two trading sessions. That's been the kind of trading activity that they've seen, and a significant rebound as well from their 2023 lows, which was around the budget time in February earlier this year. So Adani Enterprises has moved up about 127%. Adani Green Energy, 115% uptick coming in. For Adani Power, it's an 87% uptick. And even ACC has seen a 13% uptick come by. Adani Total Gas, 14% uptick. Transmission up 30%. Ambuja Cement as well has seen a 34% uptick. Wilmar with a 35% gain. Kunal, I don't know whether you're trading this cluster of stocks or not. Are you?
Well, yeah, but I think only two stocks out of the entire Adani group of names, Adani Ports and Ambuja Cements. That's the only two names which hold a lot of credibility in terms of charts. The patterns are more consistent. The volatility into these stocks is not as high and as random or inconsistent as compared to the other names. So that's the settling part for both of these names. In fact, Ambuja Cement, when the stock had hit that 315 mark in the end of January, start of the month of February, from there the stock has been consistently taking support at the rising trend line, and over the last 2-3 months there have been multiple attempts towards the break of the trend line, but every time the stock has retested those trend lines, it's actually led into a bounce. Today, rather on Friday, it was a very similar kind of a bounce for Ambuja Cement. So this comes as a very interesting chart pattern, and now that the support has been established at the 388, 390 mark, keeping that as a stop loss, positional traders could now look at along even at current levels.
Okay.
One stock which has amazed me is SBI. Numbers were super, and the stock has just not reacted. That's one stock which actually I'm surprised. Kunal, why is SBI just becoming this puffy duffy stock? It was the star of 2022, but it is the laggard of 23.
Yeah, so I think it's a phase for the stocks, and I think even today when I look at the sector composition, the activity and the trading activity, the price activity is much more inclined towards the IT, the metal stocks, and so there's a clear visible churn which is happening to the IT stocks as compared to the other sectors which were actually the leaders. So for example, the private sector banks today they are taking a bit of a backseat. Most of the large cap auto names are taking a bit of a backseat, and the activity is shifting towards the IT stocks. That generally is a phase of the sector, and generally on the expiry week we see these kind of settling phases where trading activity has to shift towards certain different sectors which could probably perform very well going forward in the next series. So my sense is that the positioning from traders is now getting tilted towards these IT stocks, and that's why you're seeing the PSU banking, the private sector stocks, they are actually taking a bit of a backseat because of some sort of profit booking. But this doesn't indicate that there's any kind of a change of trend for these stocks. It's a phase of the market where maybe for the next 1 or 2 weeks, these stocks would underperform as compared to the other peers.
I also just wanted to check what's happening to some of these manufacturing names. Case in point being Sirma SGS, which is up around 11%. You have Keynes Technology higher by 7%. Dixon Tech ahead of its earnings is up around 7%. Not the best day to compare it to the defense story because today defense stocks are down in trade. Cochin Shipyard down 10% on account of earnings, and Garden Reach are also reacting in tandem. But Mihir, your take as far as the entire manufacturing space is concerned, and especially the electronic manufacturing and chip makers or chip users, etc.
See, the direction is very clear. Government is open to more and more PLIs across sectors, and even in sectors where PLI is already there, extending and going ahead with larger allocations to the PLI. Not only that, there is clear direction of manufacturing defense products within India, domestic manufacturing and technology transfers. So I think all this put together does imply that we have a good runway for manufacturing revival in the country, led by these incentives. But we have seen in many cases, once a certain critical mass happens, then the ecosystem develops and you become competitive even without any subsidies or PLI kind of schemes. So I think mobile phone is one very clear area where we saw initial success, and now we have more and more backward integration into the mobile phone segments. We are going, probably to the chip level very soon in the next 4 to 5 years. So I think the manufacturing theme, whether it's electronics or any other sector like textiles, for example, then we have chemicals, pharmaceuticals, a lot of the spaces where government has identified either sectors or products where we need to be, self-reliant, not only from the economic point of view, but from the security point of view. So this is a theme, I think, which will, continue to be a performer for a while.
Nooresh, want to come to you because it's an interesting mix of stocks out there within the liquid universe. Of course, there is the Adani group of names, but then you can't really pick up a pattern or a trend here. Any trades that you're identifying right now?
So overall, IT is a trade. That is where we are seeing a clear demarcation in terms of what happened with the mid-cap IT. We are seeing the same play out in the rest of the larger mid-cap IT names. So we are seeing a breakout happen in LTI, Mindtree, LTTS. There is a breakout in Nasdaq. And even the larger names, we've seen a good enough recovery in the last 2 sessions, indicating there is some more to go. So Infosys is the one which saw a sharp knock on results that could go back to 1350, 1400 levels. So that's a trade I'm watching out for. Then there is LTI Mindtree. In the Adani group, it's only Ambuja Cements, which I continue to like. The rest of the names are difficult to trade. So overall, IT as a pack is an interesting trade for the next few sessions, maybe 5 to 6 sessions.
Mihir, what do you think will be the impact of this entire TCS of 20% on foreign travel?
I don't know. I mean, from the market point of view, I really don't see sectors or stocks which could get really impacted. It's of course a irritant and probably tones down the sentiment a bit, but I don't see any major impact, frankly.
Holdings, Bajaj Finance, some of these Bajaj stocks are doing extremely well. Nooresh, I'll be very repetitive, but I have to go back to Adani Enterprises, Adani Ports.
So if I were to purely look at it on a technical picture on Adani Enterprises, given away the volatility, after that big fall from 3,500, 4,000 levels, it had bounced back to 2220 the first time. The second time it bounced back to 2135. And today we are well above that 2200 mark. That's an indication generally that the market seems to have digested the whole fall. And now till the time we hold about 2200 levels, it can make a recovery back to 2800 levels, which was the last gap down, the second time it took a fall. So 2800, 3000 could also be possible, but it's a case where given the volatility, the risk rewards are not great. But you can look at an Ambuja Cements or a Adani Ports also, because that is very interesting for the fact that that stock has recovered much better and is making a fresh move. So if one wants to get into the space, a little less volatility comes in Adani Ports, Ambuja Cements or an ACC. But the first indication has come from the price action that we've crossed a 4-month high on Adani Enterprises as such, the main company.
Okay, here's the RBI governor then, Shaktikanta Das, while clearing the air on the 2000 rupee note withdrawal, said that banks have been advised to make necessary changes and that the government will decide on extension of the exchange window post September 30th. Let's listen in.
So please see it as a part of the currency management operations of the Reserve Bank. Let me put it, clearly, and that is the primary purpose which we have followed. The banks have been advised. We have issued further circulars yesterday to the banks to make necessary arrangements, including arrangements to ensure that the people do not stand under the hot sun in the this peak summer, to make arrangements for drinking water. Now we expect most of the notes to come back. That is our expectation at this stage. We will see how much notes come back, and as we approach 30th, we will decide at that.
Okay, so that's about the 2000 rupee note getting replaced. But remember, the exchange will start from tomorrow. But have the people started queuing up outside the jewelry stores as we had seen back in 2016? Let's go across to my colleague Anurag Shah. He's at the ground zero in the Zaveri Bazaar to get us this ground report.
Today is the third day after RBI's announcement of withdrawal of 2000 rupees note, and we are at jewelry market Zaveri Bazaar, and as per the majority of jewelers, there is not much of impact after this decision, and this time the situation is altogether different from November 2016, that is demonetization, and as per jewelers, the rates have also not gone up, and jewelers are, the normal demand is coming, that is also due to the wedding season going on, and there are a couple of other reasons also. According to jewelers, they think that things will be same going ahead because there are 4 months given this time for the exchange of notes. So according to jewelers, that the 4 months time period is there. So even if people want to buy gold, so there are 4-month window is available for them. So there is no hard rush to buy jewelry or gold this time after RBI's announcement of withdrawal of 2000 rupees note.
At least 20% uptick has already been seen, and we anticipate more from today onwards till the 4 months window period. Nearly about 50% sales boost can be expected.
I think so. There will be no any surplus demand. It is just a government announcement is like that. It feels better. My feeling is like that. It's better. People are cautious about that. How to do, what to do, how to play.
The people are not in the tension. They are smoothly, they are thinking what is to be done, and government has announced that every day 20,000 of the amount can be deposited in the gold. Yeah, today I saw State Bank of India also announced that you don't get 50,000 rupees. That also don't require a KYC. So that seems that there will be not much tension as far as what we have seen in last demonetization.
Okay, that's a flavor on gold. There isn't as much of a gold rush as was the case back in 2016. Kunal, are the charts though reading that or not?
Yeah, it's very similar. So not too much of a fervor for gold prices in rupee terms. The concern for gold prices actually is that the dollar gold prices are at a multi-week low, and even the silver prices. So even if we go into a bit of a rally because of this kind of a news or an event, but I think that would be very short-lived, and eventually it, I think, has to come back towards its mean, which should be below 60,000.
Okay, so that's the take coming in. Mihir, before we let you go, I wanted your word, if you can, on the capital good names and specifically on Siemens. What would you make of the 10% cut?
Sorry, I can't comment on specific stocks.
But overall for the sector, would you be a buyer for the capital goods majors, the MNCs?
Certainly, because we talked about the manufacturing theme. and most of the stocks are exposed to defense, power, railways, and of course the domestic capital goods manufacturing for various things that we are talking about. So in general, as a portfolio, we are quite over it on the industrials and capital goods space.
Mihir, on that note, we'll let you go. Appreciate you joining us on ET Now today. Time now to get the closing strategies from our technical experts. Nooresh, you go first. What's the closing trade?
So that would be LTI Mindtree. That's the stock which looks interesting for a bounce back. A breakout with the bounce back happening in the IT names. The rest of the mid-cap IT names have broken out. So out there expecting a follow-up move towards the 5,300 to 5,500 mark in the short term.
LTI Mindtree is the buy trade coming in from Nooresh. Kunal, what about you?
I'll go for Canara Bank. I think that's a stock which is showing bullish RSI divergence on the daily charts. So looks very attractive as a setup. Expecting 320 as a near-term target for Canara Bank.
Okay, so those are the top recommendations coming in from technical experts. But on that note, we are slipping into a very short break with the news that the Nifty is close to the highest point of the trading session, 18,310. Whether it's a breakout or not, we'll tell you that when we come back.